I want to make the case that the VAT is a good part of the solution, good as opposed to perfect. Too often in tax reform issues, I think we let the perfect be the enemy of the good. And I just want to emphasize there are, of course, problems with the tax, with the VAT. There are problems with any tax. But when you look around at the alternatives, the VAT is an attractive way to raise revenues. Some of that revenue can be used for deficit reduction. Some of it can be used to finance tax reform. Very briefly, Kevin alluded to the VAT in Europe. The VAT is used in about 150 countries around the world. It's not a hypothetical utopian tax. It's a tax that's actually out there doing the job every day. In most countries, it either raises the most amount of revenues or is second only the personal income tax. There are two ways to structure a VAT. I won't go into the details unless you really want to, but one is called the credit invoice, and it's sort of a transaction-by-transaction method. The other is what's called the subtraction method, and it looks more like the income tax. You sort of add things up at the end of the year and take tax deductions. Herman Cain's business plan, for example, looks an awful lot like a subtraction method VAT. It's not exactly a VAT, but no VAT in the world is exactly a VAT. There's always design mechanisms, but it basically, I think tax policy centers come to the conclusion that it's essentially VAT with one or two exceptions. The VAT gets a bad name in a number of circles as there's this famous line about Larry Summers having said that it's liberals don't like it because it's regressive and conservatives don't like it because it's the money machine, and we will get a VAT when liberals realize it's a money machine and conservatives realize it's regressive. It doesn't have to be regressive, though, and it doesn't have to be a money machine. As Bruce Bartlett has pointed out in his writings, in fact, it hasn't really been a money machine. It hasn't in the last 25 years. VATs were introduced in the 50s and 60s, and then the 70s, of course, were a very inflationary time period, and there was a lot of adjustment of VAT rates in the 70s. But he shows in some recent work that over the last 25 years, oddly enough, since Tax Reform Act of '86, VAT has not been fueling growth of government. VAT rates have not been rising inexorably. They basically leveled out. So it doesn't have to be a money machine, although obviously one of the goals is to help raise revenue. It doesn't have to fuel eternal growth of government. Some of the arguments that the VAT is a hidden rate, it's this mysterious tax that people never see, is easily resolvable. All you got to do is print the VAT payment on the receipt, just like you print a sales tax payment on the receipt. It's not tricky. It doesn't make it an agent of big government. You just print the receipt. At the same time, the VAT can raise substantial revenue, and if you're talking about wanting to raise, 2 to 5% of GDP in revenue, which is a lot of money, you can't get that from income tax reform without jacking up the rates so high or doing extreme acts to the tax expenditures in there. So if you're talking about significantly realigning revenue in the U.S., or if you're talking about generating enough revenue that you can use some for deficit reform and some to finance tax reform, a VAT is sort of, in the Willie Sutton parlance, a VAT is where the money is.